All right, guys, good evening. Happy Sunday, everybody. A new week is upon us. My name is Carlos Garcia, founder and CEO of GAR Capital. Glad to be with you this weekend and every weekend, talking about the markets, recapping how we did, talking about what's the future to come, and all things the stock market. Glad to be with you. Dow futures are up this evening, 84 points. Nasdaq's up about 50. S&P 5182.28%. The Russell's up about 0.5%. The dollar's slightly pulling back. Gold is marginally up. Crude oil pretty muted, down 0.14%. Copper's up 2%. So anyone who has those FCX calls, um, that's going to be a pretty good thing if that holds up. So looking up here, what you have in front of your screen is the S&P 500 futures. Again, we are up right now, 0.27%. And the reason why this is important is the 50-day moving average. So let's go ahead and get to it. Full screen of the market. Let's do it. Okay, here we are. S&P 500 futures. I posted a video on the live market blog. If you haven't joined already, it's scrolling on the bottom. Go to our website, www.gar.capital, and join our free plan. And we do have a promotion running. If you are a blog member that is not a member yet, we have 25% off masterclass and 25% month-to-month on premium. But it's just for blog members that are not signers or that they haven't been in the system yet or in our service. That will end tomorrow. Again, for anyone who is interested, make sure to join the blog. It's there on the actual blog itself. Let me go ahead and show you guys. I think I have it here. Let's bring up the blog. And then you can scroll up here. We have our watch list. We're going to go over that. And here we go. Expires tomorrow. 25% off month to month, 25% off masterclass. Use promo code blog. Cool. All right. So this is something that I really want to talk about, the S&P 500 and what I expect moving forward. So I do expect us to bounce this week. Why? Because we're holding the 50-day moving average, and we also have some good seasonality coming. So let's go ahead and pivot with that first. Seasonality. And why is it important? Everyone knows if you guys have been here for a minute, we've talked about it. Seasonality, very important. You can see the first half of April, pretty weak. I said this last week about tax selling. Kind of volumes pulling back a little bit due to the Masters tournament, and then you had Easter and all this good stuff. But then the second half of April, really since 2000, 23 years now, up about 1.9%. So let's call it 2%. So that's what we're looking for in terms of seasonality. A lot of bad things are being priced in, as we know. We got some breakdowns. I also put a little illustration without any commentary. This was on Saturday at 12:30 p.m. So again, take a look at that for all the blog members. But breaking it down here, let's go to ES again. 50 DMA is holding up. That's that yellow line. That's what we're going to be using moving forward. But we're going to go into SPX Spot because it doesn't show the current pricing. We're not open yet. So let's go ahead and take away this drawing here. This is the trend right here. This is a daily chart. So we got a couple of gaps to fill. This is filled, so we can remove this. And slowly but surely, we'll start filling here and there. So a couple gaps to the downside. You got one here at 42.43. You got one here at 43.23. You have one here at 44.26. You also have one here at right around 59.84. So the 59.84 number is the key one we're going to watch. As you can see, we're above the 50-day moving average. Now, again, this is all pattern stuff, but what we have seen in terms of the SPX is that once we get a trend change, a breakdown of trend, we tend to fall quite a bit before we bounce again. So you could see very crudely kind of how we have been doing. You get a break of trend and then you pull back. So break down, pull up, breakdown, pull up, breakdown, pull up, breakdown. So pull up here, really since March 2023, up, breakdown. We retested that trend line in August of last year, pulled back. This is what I'm expecting. I expect us, just like that time we broke the 50-day, look at that, 50-day. History doesn't repeat, but oftentimes it rhymes. It's the same thing with checking out patterns and technical analysis. So you can see this beautiful defined trend line, broke down, pull back up, rejected that trend line as resistance, was support class, now is resistance. We pull back. That's exactly what I'm expecting. So again, we'll pounce off the 50. We'll tag 52.50, 52.45 on S&P, and we'll pull back right into May. May will be seasonally weaker, but April is relatively strong. After that break of the 50-day moving average, again, after we bounce, I expect us to fill this gap of 49.87. So let's kind of look for the time being that we're looking for right around 51.98. That's the 20-day moving average as our first marker. This is S&P spot, not futures, but we're looking for around 52.50 futures. That's about 120 points from where we are now. So let's call it 100 points. That's about 2% from where we are today, or at close on Friday. That's bouncing off the 50-day moving average, getting above the 20-day, and then we reject this trend line just like we did before back in September. And then we'll pull back into October, November, maybe a couple months, the summer swoon, May and June, maybe week. Going into July, we'll start picking up again. Again, seasonality is just historical patterns. Doesn't mean we have to do anything. This is what I'm expecting. So again, the next 2 weeks, I'm expecting a bounce in markets into the end of April, and then we'll fade down to 49.82 to fill that gap here on S&P 500. We can also use 49.11 as a next support. And if we are looking in a bigger time frame, let's take a look at the weekly. 49.47 is the 20-week moving average. Let's just stay above that. And again, that fills the gap here. So we got a little bit of room in terms of the S&P. In terms of the week, let's look at it. Here's our week that we had. Google, SLV, Intel, that's 3 in a row, 3 for 3. That is 7 consecutive weeks without a loss. One of the weeks did not have any trades. That was that Easter week. 22 trade win streak. Amazing, amazing, amazing. March, perfect, as we talked about. April, we still have trades open, but again, 6 for 6 to start, 22 in a row. I am so, so proud of everybody. The idea is to continue this streak moving forward. So let's go to the actual live market blog. We do have a couple things to talk about. Also, in terms of the blog, we also had SLV. That was part of the last watch list. That soared. So again, pretty important to keep an eye on it of the actual watch list from the blog. Let me see if I can find the SLV. Yeah, we got that Apple call. TQQ I also posted as well, but I didn't trade that. But Apple, this was back on the 11th, that beautiful breakout of 170. Oof, what a ride for Masterclass. They hit that. But let me see if I can find SLV here. Let's see. It's a lot of stuff here. I know. A lot of stuff. If I can find this. We also have polls there talking about the markets. Where do you think it's going? Etc. Etc. Very fun community to be in. We'd love to have you on board. All the info is scrolling at the bottom of this video as I am scrolling higher. All right, let's take a look here. SLV, watch list is up. This is last week. SLB above 25.16, the 20 strict strike calls. Intel 37.22, target puts to the 35. Wait a minute. Does that sound familiar? Intel 33 puts. That was part of the watch list. How about SLV above 25.16? Oh, wrong one. Here we go. We'll go to SLV 25.16, went all the way up to 27.24. So watch lists are key. This was just last week. All right, let's go back to our current watch list. All right. Am I over here? We go. All right. So let's start with Boeing. Boeing. We're going to go to Boeing here. We also have the watch list up for our masterclass and premium members. That's a separate watch list. So our premium masterclass members get 8 stocks that they're watching every week. 3 with the public watch list on the blog, and then 5 on their own. 166.82, the breakdown on Boeing. If we can start breaking down a little bit, we're going to look for 155 to 160 as our strike for puts. So again, pretty ugly here. And we're breaking down. So 166.82, that's going to be the key one. Why that level? That's the level that we rejected back in July of 2022. So we'll see if this resistance adds or becomes support this go around. We do have gaps to fill to the upside. Downside gaps have been filled. So there is nothing else to fill in terms of this structure of price action, let's just say. But we do have a gap to fill here at 242. So not all is lost in Boeing, just being hit in the head with a ton of headlines. I know how that feels as an Apple trader. Oxy, this is energy above 71.19. I'm taking a look to see if we can hit those highs. right around 76 to 77. 75 calls, I imagine, would get the most volume. So again, we'll keep an eye on Oxy Petroleum. PayPal. One day we'll get above 68 and then go and fill this gap here to right around 72.60. I have 72.20, but we'll take a look at the 72 calls or 73 calls once we break 68. And those are the stocks that I'm watching this week. The S&P stuff, that's the really important stuff that we're looking. So let's take a look at the short term in terms of S&P futures. Again, bouncing off here. If we just draw a crude trend line, at least on a short term basis, we can kind of get away with a little bit of trend spotting. So let's see if this looks pretty decent. Yeah, 5140 being our support. We're bouncing rather nicely. Again, if you take a look at the daily, you could see the 50-day moving average, the yellow line. Now, we have not broken below that 50-day moving average since November. So it's been quite a ride. Let me see if I can remove this drawing. There we go. As you can see, downward trend, got to break above 5250. I think 5270, that's our next resistance. That's that 2% move in terms of seasonality. And then we're going to roll over. And again, this is an opportunity. Pullbacks are opportunities. I think they are available to be bought. Again, depends on the price you're looking for. But I do expect us, when we do pull back, to look to buy. Absolutely. But it's a good thing that we get some little discounts here and there. Can't just go straight up. It doesn't work that way. But looking forward to the week. Bitcoin right now, I do have some BITO calls. We do have the Bitcoin halving this week. I believe it's on the 19th. So even with all this Iran-Israel conflict stuff, the market is green futures. So not a lot of fear out there. We are bouncing that around 66,000. Pretty ugly as a BITO call holder. We'll see how tomorrow works out. Apple, keep an eye on it. Keep an eye on it. Get above 178.68. 185 is a possibility. Ain't dead yet. But there's one thing about Apple I want everyone to take a look at. Does everyone remember XLE? Anyone? Remember, we talked about this? The breakdown before oil was interesting and everyone was into it. We talked about this downward trend and then the pop and then the pullback and the break and then the pullback. Again, right at resistance, right? And then we finally broke out. We took care of that. Take a look at Apple, guys. One break, two break. We are setting up that if we can break above 178.68, team, 185, then 190, and then 198, and then you can sell it like XLE, pull back again, and then buy it, and then pull back again. Welcome back to long-term chop. That's it. And if we break down, so be it. But I expect Apple. Maybe we run out of time, but take a look at this in terms of our current calls. I mean, about all the time I could. So let's see if we can get this going. Okay. So if we pulled back like we did in August, right in November, we bounced. Pull back in December since we're getting close to breaking out. If we do break out above 178.68, 185 to 190 is coming, then to 198 if this pattern holds. That's all we're looking for. So let's remove some of these lines here. And the reason I say that, oh shoot, that's not what I wanted. Let's go ahead and remove this strong. There you go. I know a lot of lines in the screen, but the main one is a downtrend break, downtrend break. And again, as long as this support holds, technically speaking, we filled this gap. And you can see 1, 2, support as long as 165 holds. If you break above 178.68, team, 182 is your next marker. That is going to be your 200-day moving average. We need to get above that. And if you do, go long Apple, you're going to get to 198. And that's what I see for the week. Should be a fun one. So let's make it a great preparation day for everyone that's getting prepared for the week and then getting ready for Monday. Let's continue the streak, 22 in a row. I'm so proud of everybody. Let's continue with kind of the habits that we've been doing now, watching these videos, preparing, writing down the watch list, reviewing the trades and all that good stuff. Very, very important. So any questions, as always, feel free to DM me. You can email us garcapital@gmail.com. I hope you have a great rest of your Sunday, and I will see you guys tomorrow for the morning note. Have a great rest of your Sunday. Cheers all.